the inflation will keep going and the prices will keep rising in dollar terms faster and faster. We're already very near the end game, and it's not going to stop.
Please join us for our next live stream Sunday, January 30th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, January 30th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. As always, if you are new to our channel or if you haven't already done so, please do subscribe, hit that bell to be notified on updates, and give us a thumbs up. It really does help the algos to help us to do what we do for you. Rafi Farber joins us today. Rafi is the publisher of The Endgame Investor, an emotional, balanced approach to the end of the fiat monetary system. And we are delighted to have Rafi on as a first-time guest on SBTV. It's time to saddle up and silver up for Rafi Farber. Rafi, welcome to SBTV. How are you doing?
I'm doing very well. How are you doing?
I'm doing great. Glad to have you on board. In fact, Rafi, this is the first time that we've had a chance to speak with you here at SBTV. So if you don't mind, could you let our viewers know a little bit about your background and how you got into gold and silver?
Sure. I think we spoke at Silverfest together, right, with Chris Marcus, yeah?
Yeah.
So, it's good to see you again. I'm Rafi Farber. I got into gold and silver through basically Ron Paul, through the Ron Paul 2012 campaign 10 years ago. And he really, red pilled me. Is it red pill or blue pill? It's red pill, right? Red pilled me and got me into basically clicking into my brain that all the questions that I had about economics that didn't make sense to me and I just ignored, suddenly they all fell together and I understood that, not instantly, it took, a few months to all fit together, but I understood basically that the monetary system was corrupted and that everything goes back to gold and silver, meaning all value is based on that, which is why all monetary systems start based on gold and silver at some point in history. And that's how it still is, even though it doesn't look that way, because basically when you exchange a dollar or a peso or a euro for anything, the reason that these paper money substitutes, I use the word money substitute instead of currency because it's just clearer. These money substitutes exist because they were originally based on gold and silver, and since prices can only go backwards in time by the Austrian school economics theory that of regression, basically, that you have to have stable, you have to have a flow of prices that go back into the past, otherwise you can't do business, right? Because the prices. Prices today from prices yesterday, and therefore prices yesterday from the day before, all the way back in time, eventually to gold and silver. And without that, you have no division of labor. So that kind of fell in, and that got me to the core of really understanding. 2008 had just happened, and the bailouts, and I didn't really understand what was going on. It just looked really bad. That's all I knew. And I saw what was going on in the markets. I saw what was going on in commodities, and I didn't have any real grasp on this. I just knew this was bad. And then 4 years later, I discovered Ron Paul and I figured this out. And it all goes back to the monetary system. All the corruption in the world, not just financial, but everything that is going on today. Inflation, the way I see inflation, it's rising. We call inflation rising consumer prices, but everything in the world is inflated, especially academia, education, politics, medicine. It's all inflated because people go through motions without thinking, in investing, in treating patients, in writing papers. Everything is inflated, and it all starts with the money. And about the endgame investor, my basic investing philosophy is, I use technicals sometimes to try to triangulate prices. I use fundamentals, obviously, but what is most important for a trader to understand, especially in these very volatile, scary times in the world all over the place, is you need emotional balance. And in order to have emotional balance, you need to be able to buy the dips. And to be able to buy the dips, you need cash. And in case there are no more dips, you need positions. You need to understand that you are an emotional creature, that you will freak out at times, and in order to lessen those freakouts, you need to be able to have some stability in your portfolio. So you need to know your own heart and your own mind and balance it. And if you can get through this emotionally stable, relatively, then you'll succeed. And if you don't, you'll get scared out. And that's how I trade. I keep my psychology balanced, and it's different for every person.
You know what's pretty interesting with what you just said was that when they removed gold, I guess we could say even silver from backing the money, that corrupted. You used the word everything.
I mean, I can give just a very quick example of how it corrupts everything, right? So if you have an inflationary system where a government can print money and extract value, then they will inflate whatever sector they're in charge of. They'll inflate the medical sector. They'll inflate the education sector. The more they control it, the more they inflate. The bigger it gets, the more expensive it gets, and the less value it gets. Just how much value do you get for a very expensive college diploma? Very, very little. There are some certain gold and silver nuggets in the education sector. Of course, you can learn some very important things if you find the right people. But it's like just like in stocks and in finance, you have to find the right the right hard investment in order to get any value out of it, because everything is so inflated.
That's a great point there, Rafi. It's getting harder and harder to have any interview without talking about the Federal Reserve, Jerome Powell, and what the gang is doing. And recently, Jerome Powell came out and he tried to explain transitory, where he said inflation will slow down, meaning the percentage number, 5% inflation, 6-7% inflation. But he said, don't necessarily expect the price of things to come down. So prices may remain elevated. What's your take on this? What's your thoughts when you hear that?
Powell doesn't know anything that he's talking about because he's just a PR guy. He's not an economist. He's a statistician, and that's what they've always been. Yeah, of course, consumer prices are not going to come down. I mean, that's not much of a prediction to make. If you look at consumer prices since 1970, they've never gone down. Maybe for like a few months they've gone down in a severe depression or deflationary panic. Like in 2008, they went down for maybe a month or two or something, if you're going to talk about the CPI. So like if you look at a chart and it just goes up, to say, oh, it'll keep going up, well, you're a genius, thank you. I mean, it doesn't really say much about your thinking ability. But what Powell does not understand, I really don't think he understands this, is that first of all, inflation is the amount of money substitutes in the system. If it's inflated, there's more money substitutes and less real money. The proportion of money substitutes over real money is the level of inflation. Basically, like you have the unit of liability of the Fed is the dollar, and they have a certain amount of gold on their balance sheet. So the more paper they have in their balance sheet versus real money is the inflation. And how that affects consumer prices does not have to do with Powell. It has to do with the public. And the public is the final arbiter of how expensive in dollar terms consumer goods and services are going to be. And the Fed is playing a psychological game where he tries to get people to not believe that prices will keep rising, but eventually and this might already be starting, and you'll have a feedback loop where higher prices will lead to higher prices, will lead to higher prices, and it'll just spiral out of control, which happens every single time in every single monetary system. The reason it's taking so long now is because this is a global thing, and this has never happened globally. It's happened in isolated countries where they have their own currency, but now it's happening in the dollar, which is basically the currency of everything, because every other currency is backed by the dollar, which is backed by gold, and originally silver. And from 1873, they switched from a silver standard to a gold standard, which itself was an attack on the middle class, because the middle class had silver and rich people had gold. So if you demonetize silver and move the dollar to gold, then you're going to attack the middle class and lower the value of their money in favor of the rich. And that's what they always do. I mean, that's the name of the game, to make the rich richer and the poor poorer. So the inflation will keep going, and the prices will keep rising in dollar terms faster and faster, and we're already very near the end game, and it's not going to stop.
Yeah, okay, we'll touch on a few of those things in just a bit. Staying with the Fed and former New York President Bill Dudley, he came out and said in a Bloomberg article that I have news for those who think the U.S. Federal Reserve turned more hawkish on inflation. It's only just begun, is what he said. In your opinion, what does he mean when he says it's only just begun, and what does it mean for gold and silver?
Well, Dudley is thinking classically because he's missing something in his mind too. He's also a statistician. He's a little bit more rational than Powell. This is all relative, but what he's saying is that he thinks in a theoretical construct the Fed has to keep raising interest rates and tightening monetary policy until they get consumer price inflation under control. Except they can't do that. They can't do that anymore for technical reasons, and I'll explain those in a second. But even they will keep raising interest rates. That's true. They will keep chasing, just as they did in the late 1970s until 1980, which they succeeded in chasing when they were able to do that because the debt was so much lower back then, and it was manageable, so they could raise interest rates to 20%. Now they can't get anywhere near that. But it was specifically during that time when nominal interest rates were at all-time highs, when gold and silver almost blew up the dollar. Volcker was saying the then Fed chair was saying, I don't know what's going to happen to the dollar, but we just have to keep raising interest rates because there's nothing else we can do. So is Dudley right about that? Are we going to have like a 1970s to 1980 inflation chase? No, we're not, because it's impossible. At some point, probably at 2.2%, 2.5%, maybe 3%, the entire structure of all the bubbles that have been accumulating since 1971, it's all going to fall down, and the very, very sick, inflated banking system is going to implode. And believe me, when that starts, the Fed is not going to say, oh, well, we have to fight inflation. They're going to say, oh my God, we got to print money because everything is going to hell. So yeah, it's just begun until it's going to end when asset prices start collapsing, and that'll be it. But the technical reason why the Fed can't even tighten monetary policy at all, even if they wanted to, is because now there's about $1.5 trillion stuck pinging in ping pong between the Fed and the banks in something called reverse repos, which was basically, just forget about the name. It's the Fed printed like $120 billion a month since March 2020. All that money accumulates. Right? It couldn't get into the money. It couldn't get into the monetary system. It's outside, between the Fed and the banks, going back and forth, not going anywhere else. That money can't just simply disappear. So when they stop the QE, all that money is going to enter the banking system and increase the monetary inflation rate. All that money is going to come in and keep raising prices still. They can't even tighten if they wanted to. So they can't chase, even if they tried.
Yeah, that's another great point. I mean, when we go back in time, we saw the repo market inflating, getting very, very high numbers. And then now we're seeing the repo market with basically zeros with donuts, but we're seeing the reverse repo market with the big numbers. So absolutely correct there. I agree with you. But with the Fed, part of the end game, the Fed and other central banks, they make it no secret that they want to move to a central bank digital currency, or CBDC. Rafi, I understand you're a libertarian. So from a libertarian position, what's your view on this?
Obviously, I understand why people think that CBDCs are very dangerous, and theoretically that's true. A central bank tracking every single transaction with a blockchain is terrifying. I can't argue that point. What I can say is that CBDCs, if everything is tracked and traced, people are going to want privacy, because you don't want the government knowing everything that you're buying. So I can't think of anyone who would want that. Even the most ardent government control lefty people don't want that, because they have secrets, and everyone has secrets, and that's normal. So they're in that kind of world where everything is going to be tracked and traced, every single transaction. There's going to be a premium on private money, right? Because people are going to want to barter between themselves so that their transactions aren't tracked. So people will have to use gold and silver coins or whatever, just so they can get stuff without people knowing about it, whatever it might be. It could be, like, I don't know, sex products or something like that. It could be just like the stupid benign stuff. I'm not even talking about like crime. But even more than that, a CBDC will be transacted with so fast, right? And it makes the process of hyperinflation, which is a defense mechanism of society, so much easier to do because you don't even have to like transfer anything. You just push a button on your phone and transfer it. So once hyperinflation hits, the CBDC, which itself is based on the dollar, which is based on gold and silver, will collapse. So let them do their CBDCs and let them hyperinflate their monetary system and collapse everything, and then they'll lose control, because when they lose control of the monetary system, they lose control of everything, and it's back in the hands of the public. So bring it on.
Yeah. Rafi, let's say the current situation is where fiat hyperinflates, and throughout history, whenever a currency hyperinflates, that government or central bank will bring in a new currency. So let's say the Fed brings in this CBDC, this Fed coin, and they choose to back it by gold. Would that help the situation as you see it anymore?
Theoretically, it could. The question is, would the public trust the Fed that it has any gold? At the point where the dollar hyperinflates, the Fed has already lost all credibility. That's why it's hyperinflating. The dollar losing all value because people believe that there's nothing there. So in order to believably back a currency with gold or silver, they would have to have their supplies audited, and even then, people might not trust them because society will be so hopped up and mad that how are they going to get control of it back? And with the entire banking system collapse, I don't see how they could even survive. I mean, I see the Federal Open Market Committee just like, taking a plane to some Pacific island and trying to hide out. I mean, people are going to be really mad. So what I see is more likely is that the monetary system will just break up, and you'll have private monies and gold and silver coinages, maybe some new currencies coming out, but everything's going to break apart because there will be no faith in a central body anymore. I mean, we're seeing that in health now. People are not trusting doctors for good reason. So the Federal Reserve is like the doctor of the monetary system, and they're messing everything up. So when you lose trust in an entire globe, an entire world, I mean, it's not just the U.S., everything based on the dollar, you can't just say, oh, okay, we're going to back it with gold now, everything's going to be fine. They're not going to trust you.
That's another great point, because if the dollar is not even linked to gold right now, and we can't even get an audit in Fort Knox of how much gold we have, why should we expect when it actually is linked to gold that they would be honest enough to give us a clear audit? So that's another great point there. Rafi, in an article on Seeking Alpha, you noted 4 things about what gold is not. You had said gold is not an inflation hedge, not a store of value, not a unit of account, and not a doorstop. Can you go over why you spoke on each of these 4 items as to why gold is neither of them?
Okay, well, the first one is gold is not an inflation hedge. So just look, what gold is, it is money. That's what it is. It maintains the division of labor, because the division of labor is impossible without money. And in order to start a division of labor, you need something with value that people just value for itself, because otherwise without that, you need an authority to threaten people, and you can't start an economy with threats. You have to start it with organic trading. So it's not an inflation hedge, because gold is money. It can function as an inflation hedge. Yes, it can. But what it is simply money that is not inflated. And because it is money that is not inflated, you can't inflate gold, right? You can inflate on top of gold. Money that is not inflated is just money. For the same reason, it's not that gold is a unit of account. It can function as a unit of account, right? It's good at that for a lot of history. It doesn't mean like in certain, let's say from 1980 to 1982, was gold a unit of account? Not really, because if you're going to take it from $872 to whatever it was, $300 by 1982 or whatever, it halved its price in 2 years. So during those years, was it a unit of account? Was it an inflation hedge? No, it wasn't. It didn't serve that way, but it was still money, because money was being messed around with during those times, and there was a lot of problems with money, gold is money. That's what it is. Everything else is just something that it can function as because it is a money. Just simplify things.
Okay, and gold's partner, silver. Silver is also seen as money by a lot of us here. And you mentioned how when we do a silver squeeze, we are actually squeezing the dollar. Can you help us understand this?
So, meaning when we go back in time, the dollar is still really on a silver standard. By the regression principle, by going back in time to what was the origin of the dollar. It wasn't gold; it was really silver, because that's how it started. So when somebody is long a dollar, when you have a dollar in your pocket or in your bank account or whatever, you own a dollar at the expense of silver. So what you would do basically at the beginning of the dollar's history is you would take your silver, you would deposit it into a bank, basically sell it to the bank, give it to the bank in exchange for a dollar to represent that silver. So in that transaction, what you are when you own this dollar is you are short silver, because you sold the silver short to the bank to store for you, and you'll trade it back for the dollar, right, when you want the silver back. So when you are long dollars, you are short silver. So when silver is going up in value, it really just means the dollar is going down in value. And the owners of dollars, who are all short silver, the dollar the dollar is getting squeezed. It's the dollar itself. So when in January 1980, when silver hit 50 and gold hit 872, it was really the dollar that was getting squeezed out of existence. And had folk not been able to save it, that would have been the end of the monetary system all the way back then. And that's what's going to happen now. I mean, the price of gold and silver, they're pretty much going to become undefined in dollar terms, unless the Fed can convince people that there is gold behind it and then freeze it there. But otherwise, the price will just become undefined, and gold will be defined in terms of goods and services, and silver will be defined in terms of gold or goods and services, and you'll have a new ratio. And we see that every time there's a dollar panic, the ratio of gold to silver goes to around 15 to 1, which is historically its monetary ratio. That's around what it is. It changes a little bit, but yeah. So when silver goes to 50, 100, 500, whatever it's going to be, it's really the dollar that's in trouble, not silver. It's the dollar getting squeezed.
Okay, another country whose currency is in a bit of trouble is Turkey and the Turkish lira. In some of your research, you noted that in Turkey you saw upward movements in real estate and also in silver. And you noted that real estate is an asset, but silver is money, as you've been speaking about here. In a currency collapse, how do you see assets performing compared to money being silver and gold?
Well, when you're in a society of a currency collapse, what's happening is that the medium through which the division of labor itself is maintained is falling apart. So the entire division of labor stops. I mean, I've talked to businessmen in Turkey through contacts I have here in Israel, and basically they can't have price discovery, because you buy a component for something, let's say paper for something that you're making in a factory, and you make an order in the morning, and in the afternoon the supplier is asking for 40% more than he asked in the morning. So then you can't do it. You can't do the deal. You can't produce things. The entire division of labor falls apart. So really what's happening in a hyperinflationary economy is that the entire division of labor is in collapse. And in that system, in that sort of disease, what you need is a functioning money, or else you can't make anything. So the biggest demand for anything is money itself, because without that, society just collapses. Are houses important? Real estate important? Food is important? Obviously, you need that stuff. But not everybody needs real estate, because some people have houses already and they have a place to live. Some people have access to food. They're farmers, or they've hoarded, or they have contacts that they can get food, and that's important too. But not everybody needs food right now. In a hyperinflationary collapse, everybody needs money right now. So the price of money in terms of other goods and services goes up way, way faster than anything else, because that is what the market is demanding at that time. It needs a money, and everything else that is needed will also go up in the dead currency terms, but not as much as actual money. So the first thing you need your hands on is money, then food, basic needs, shelter. Go from there. Start with the division of labor, and then accumulate your needs.
Okay, keeping in line with this, I've been reading where a lot of people in Turkey, they've been getting into Bitcoin and also Tether. Would you think those are good moves, where you could call Bitcoin and Tether a currency at that point, or do you think that they may be seen as money in Turkey?
No, they can function as a money. They can function as a money accidentally. but they can never be a money just logically, because the value of Bitcoin when it started was based on the dollar, because the question was, when Bitcoin was invented, well, how much is a Bitcoin worth? And somebody said, well, I'll pay $2 for it, or whatever it was, whatever the first transaction was. I don't know. And so you start Bitcoin historically based on how many dollars it's worth. And what's a dollar based on? It's based on how much gold, it's based on gold, because that's how a dollar started. So it all goes back to gold. But right now, Bitcoin is just a speculative asset that is based on an understanding that central bank money is doomed. That's true. There's some truth to it, but it can never be money. And eventually, when the banking system collapses, I don't even see how they're going to keep mining these things, because in order to mine Bitcoin, you need electric power. And in order to have electrical power, you need the electric company to pay its bills. And how is it going to pay its bills if the dollar doesn't work? You can't have a money that's based on mining, and if you stop mining it, then it goes away. I have a feeling like 10, 20 years from now, or whatever it is, like we have this idea of a blockchain. Well, interesting, but like as a money, that's kind of just weird. And I can't really get my head around why people think that it's money, other than it's going up, and like look how much gains I have. Well, I mean, that's happened before.
Rafi, I understand you have certain views regarding silver and gold as mentioned in the Torah. Why do you think silver and gold can be found throughout the Torah from the very beginnings in Genesis?
Well, even before the Garden of Eden story, really, we're told, there are these verses that explain where the Garden of Eden is located. It's around these rivers and this and that. And the first thing that's mentioned is that there's this gold there. Zahav eretz tov. Like there's good gold around where the Garden of Eden is. Like, so what? Why do I even have to know that? Why is it there? And basically, it's hinting to you that man is an economic creature, that we interact, that we pool our labor, and to basically conquer the world. The first divine command from God to man is to conquer, to basically conquer the fish of the sea, to rule the world. And the only way man can rule the world is by cooperation, economic cooperation. If we're always fighting, then we're going to be ruled. If we're cooperating, then we will rule the world. And this is what has happened. We're still cooperating and fighting, but essentially we're one species with the division of labor. And with the word zahav, right, which is gold, it's a compound word of two Hebrew words of zeh and ha, which is give this, exchange this. So the hint in the word itself is that it's an exchangeable good. It's a medium for the division of labor. And the word kesef, which is money in Hebrew, is the same word for silver, because that is the money. And the word kesef also means to desire. And it's the material that Abraham used to buy his burial plot, and that economic transaction is in the Bible itself. Why is it so detailed? It describes the kind of silver that he used and how he weighed it out, and how he negotiated the deal. Like, why do I need all these details? Because you need to know how business is transacted, because that is the basis of society. And these are very important ideas about what human nature is. Without money, society cannot function, and the Torah makes that clear in a very, very simple way. There's nothing complicated about it.
Rafi Farber, before we head out, can you let the listeners know how they can follow more of your work?
Yes, I have a YouTube channel. My YouTube channel is Rafi Farber. In the description of all my videos, you'll see how you can sign up for the Endgame Investor. We'll see how I'm trading the gold and silver markets now. I'm not a very big trader, but I buy on weakness and I sell on strength, and I keep a core, and I try to balance my own emotions, and I try to balance the emotions of my subscribers, and to get them through the game, because this is coming to a head very soon, and we need to keep our heads. You can also become my patron on Patreon, and at patreon.com/endgameinvestor. And I give my patrons, for whatever they want to contribute. I have a weekly discussion on the weekly Torah portion, and economic concepts of liberty and finance that come from that portion, whatever I can find. And whether you're religious or not doesn't make a difference. If you appreciate human history, and very ancient concepts of money and freedom, then you'll enjoy it. Whatever your religion happens to be, I hope you join me. And it's just been great meeting all the people in this community, all my subscribers, all my patrons, and all the people that I've interviewed and have done interviews with. It's just an amazing group of people, and I'm glad to be part of this movement.
Right, Rafi Farber, we're glad that you are part of the movement. Publisher of the Endgame Investor. I hope we can do this again soon, Rafi.
Thank you.
That was Rafi Farber, publisher of the Endgame Investor, sharing his views on the economy and sound money. To see more of Rafi's work and views, you can find him on Twitter at Rafi Farber, and you can support him on Patreon at patreon.com/endgameinvestor. If you like this video, please subscribe and give it a thumbs up. Audio-only versions of this interview can be found on iTunes and Spotify.